And so ESOPs can change lives. They can be more than a retirement plan. They can be a wealth creation vehicle. And they can provide significant benefits for people that otherwise would have lived on a modest 401k amount and on Social Security. You don't have to be Mother Teresa to do an ESOP because you're going to get full value for your company. But you can't be Gordon Gekko just focused on yourself and what this means for you. ESOP candidates are people that care about their employees and their community.
Hey there, welcome to this week's episode of The Freedom Experience. I'm your host, John Moncrief, and today on the show, I'm joined by Kelly Finnell. He's one of the leading experts in the world on employee stock ownership plans or ESOPs. And he's been around since the beginning, since 1979. It's over 4 decades that Kelly has been involved in working with business owners to create ESOPs. He's spoken at over 300 conferences around the globe. He's authored the ESOP Coach, and he currently leads EFS ESOP Consultants based out of Memphis. So what stood out for me in this conversation is just how powerful ESOPs can be. Not just as a succession tool, but as a way to create long-term alignment and real value. You know, when employees become owners, it's like putting everyone in the same boat and having them row in the same direction. And that makes a business much stronger, more profitable, and much easier to run. The other thing we talked about is ESOPs as an alternative to selling to private equity or to a strategic buyer, and how this gives owners a way to exit without selling their soul. It's a way to stay involved with your business, to protect your team, to preserve the culture that you've built over so many years. And we talked about an entrepreneur from Texas who's 80 years old, second generation, who's looking at an ESOP to make sure the name of that company stays on the building for generations to come. And then there's the impact. Kelly shares this incredible story about a mailroom employee who walked away with $4 million as part of an ESOP. And he said, the mailroom employee said, I'm going to make sure that I set up a fund so that all of my children or all of the children of this family forever will have their college education paid. You know, that's just life-changing. And I think that's what the beauty of an ESOP, and that's what an ESOP can do. It can close the wealth gap and create a legacy that lasts. So if you're thinking about alternatives to your succession or your succession planning, then dive into this episode. You're really going to enjoy it. Kelly, welcome to the Freedom Experience. I'm really excited to have you on.
Well, thanks. It's great to be with you.
So we're talking all about ESOPs today. And just before we started, I was saying that my first exposure to ESOPs was through a gentleman called Jack Stack, who came up with a great game of business. And he talked about open book management and how important it was that everybody in the business understood exactly where they were, because they had some really tough challenges to overcome. And that was my sort of first exposure to the idea of ESOPs. Maybe just to kind of give the audience a sense of where you come from and who you are and how you find your way into helping everybody establish ESOPs would be a good start.
Well, yeah, I actually got into the ESOP field totally by accident. I went to law school in 1978 thinking that I was going to be Perry Mason. I loved public speaking, and I thought that being a trial attorney would be a great way to use that skill that I had developed and the thing that I had such a passion for. And I, as an undergraduate, majored in philosophy, never taken a business course. The only time I ever went into the business building was to meet the girl that I was dating, who I've now been married to for 44 years. She was an accounting major. And the only time I went into the business building was to meet her to go to lunch.
Wow.
And so my first job that first summer after law school was working for a big firm in Massachusetts in their pension department. And I actually discovered that I loved business. And so I went back to law school and tried to double down on all the legal business courses so that I could catch up on what I missed as an undergraduate. One of the interesting things that happened early in that experience working for the firm in Massachusetts was that we got a letter. This is way before email. And the letter asked for the attorneys to write a white paper on ESOPs. This is the summer of 79. ESOPs were codified in ERISA in 74, so they're only 5 years old.
Okay.
Well, all of these pension lawyers looked around at each other and said, I don't know anything about ESOPs. Let's give this project to the kid. And in 1979, I was the kid. And so I spent much of that summer researching and writing about ESOPs. I had decided that business wasn't as bad and as boring as I had previously thought, and I loved the idea of ESOPs. And so I graduated from law school in 1981 and have been in this business ever since.
So I'm curious, Kelly, 74, the ESOPs kind of come into, what would you call it, into law, into...
The concept of ESOPs had been around for 20 years prior to that, but it was a concept developed by an economist who was also an investment banker. And then he worked with a U.S. senator to bring this concept into the Internal Revenue Code.
Okay.
And so that's what happened in 74. The concept of an ESOP had been around. Employee ownership through this structure had been implemented, but it was without any congressional legislative structure or approval.
Got it. And then at that stage, what's the uptake? So sort of 79, 80, how many companies are looking at being ESOPs? And
there were just a few ESOPs done between 79 and 84. In 84, there was a major piece of legislation which really moved the needle and caused many more companies to be interested in ESOPs. So the thing that happened in 84 is Congress implemented Section 1042 of the code, which allows business owners in certain situations following certain rules to be able to sell the stock in their closely held company to their employees through the ESOP vehicle and defer or eliminate the tax burden that would otherwise fall on the profit from that sale.
Gotcha.
So it gives a business owner a way to sell their company tax deferred or tax free. So that is such a valuable, rare opportunity that spurred a tremendous amount of interest in ESOPs. And so we saw a period of time from 84 to 90 where there was a large amount of ESOP activity. Then ESOP activity slowed down again until the late 90s. Before the late 90s, only C Corps were allowed to adopt ESOPs. In the late 90s, Congress passed additional legislation which allowed S corporations to adopt ESOPs. So we saw another big flurry of activity for 4 or 5 years after that. And now ESOP activity has enjoyed a huge expansion, and this expansion is sustainable because it's not based on a tax incentive like the other flurries of activity were. This one is based on the aging of the baby boomers.
Gotcha. Yeah.
So this is a 20-year expansion of ESOP activity where the others were much shorter and driven by tax changes rather than by this huge change in demographics.
So I haven't had anybody on the show who's had this much experience, particularly from kind of writing some of the original white papers right the way through. What's been the real driver behind ESOPs? Is it to sort of bridge that wealth gap and trying to move some part of ownership to employees, or have they just been different motives?
I've never had a business owner tell me, I want to do an ESOP to bridge the wealth gap. But I think that is an important result. What business owners tell me is that I've considered private equity.
Yeah.
Perhaps I've hired an investment banker and been down that path and decided that that wasn't the right approach for me. Or perhaps they didn't need to hire an investment banker and explore that opportunity to kind of intuitively believe that that was not the right approach. And so the things that make business owners decide that perhaps a sale to a third party is not the right approach is first a desire to protect and reward the people that have helped them build this successful business. So with an ESOP, you have an internal transition. And so because it's an internal transition as opposed to a transition to a third party, you know that your employees are going to be protected.
Yeah.
There aren't going to be any firings. It also is a way to protect your customers because very little is going to change in the operation of the business. And so many business owners tell me that they want to reward their employees, the people who have helped them get to this point, and they want to protect them. They also tell me that culture often is the key to our success. And I know if I sell to a third party, they're going to tell me nothing's going to change, but the reality is everything is going to change and our culture is going to become their culture.
Yeah.
And that's not what my people signed on for. And that is not why we're so successful today. You know, I view my employees as an extension of my family, and that's going to change if we sell to a third party. I also have business owners tell me that I view this company as an important aspect of my legacy.
Yeah.
I've had business owners tell me, we did an ESOP for a company in Dallas recently that is 104 years old. And the business owner told me that there has been a company in Dallas, Texas with my family's name on it for 104 years.
So what generation is he? Is he?
You know, believe it or not, he's only second generation. The gentleman was in his mid-80s.
Yeah.
No, it was just a second generation transition, which is extremely unusual for a 100-year-old company.
Yes.
But he said, I want to make sure that there will always be a company in Dallas, Texas with my family's name on it. And so if I sell to a third party, that's not going to happen, or at least I can't assure that that's going to happen. If I sell to an ESOP, I can guarantee that.
Yeah.
So those are the kinds of drivers that I hear business owners talk about that lead them to do an ESOP.
And I'm just thinking in terms of successions, staying involved in the business. Is that something else that they're looking at? I think if you sell to PE or kind of strategic acquire, it's either an earn out or game over. Yeah. This way you kind of have that sense of purpose still, I suppose.
Yeah, absolutely. One of the most fun expressions that I've heard along those lines is I've had more than one business owner tell me that my wife married me to have dinner, not lunch. And she's insisted that I never retire because she doesn't want me to run her life the way I run the lives of my employees. And so I want to keep working.
Yeah.
And maybe they don't want to be as deeply involved in the day-to-day operations as they have been. And many of our clients have already transitioned those to a strong successor management team. But they want to stay involved in probably more of an advisory role. Often we see owners transition from the CEO to being chairman of the board, and they take on a more strategic as opposed to operational role.
Yeah. So for the listener, for folks who are listening right now, and who perhaps don't have as much background on an ESOP, what is that sort of ESOP 101? What is it and how does it work? And we talked a little bit about pension.
Yeah.
But yeah.
So I always begin by defining what ESOT stands for, or ESOP. ESOP stands for Employee Stock Ownership Plan. I often have Business owners incorrectly believe that it stands for Employee Stock Option Plan, and there's a big difference between an ownership plan and an option plan. And ESOT stands for Employee Stock Ownership Trust. So
Gotcha.
That's where I always begin. And an ESOP is really two things in one. For a business owner, an ESOP is a liquidity and succession strategy. And for the company's employees, an ESOP is a retirement plan where, unlike a 401k plan where they contribute to the plan, with an ESOP, employees typically don't contribute. And unlike a 401k plan where the assets of the plan are invested in mutual funds or EFTs, with an ESOP, the investment is the stock of the sponsoring company. So
Gotcha.
They end up with company stock of their company as the asset of the plan, which gives them a strong alignment of interest with all of the other people that work for the company and put them all in the same boat, rowing in the same direction to make the company more profitable, which in turn results in them having larger retirement accounts.
So I'm really interested in that point. We touched on culture a little bit earlier, but that idea of getting everybody rowing in the same direction, is that something that you're seeing with ESOPs, that in general, they kind of everybody rows in the same direction because they all have a stake in the outcome somehow?
Yeah, and we would all intuitively think that was going to happen. But fortunately, we don't have to rely just on our intuition. There have been many academic studies that prove that out. So a common research subject for people that are getting a PhD in the field of management is this subject of employee ownership. So there are numerous studies out there that you can Google and find that compare ESOP companies to similar non-ESOP companies and prove out the fact that the ESOP companies outperform their similar competitors. And there are also studies that compare company performance pre-ESOP and post-ESOP and document that this very company performed better after. The other thing that kind of proves this out is just experience, having watched companies that become ESOP owned.
Yeah.
Doesn't happen immediately. When I first started in the business, I naively thought that we would do a rollout meeting and explain to the company's employees what the ESOP is, how it works, how it benefits them, and that they all were going to be thrilled. They were going to have immediate buy-in, and after the meeting, they were going to come up and hug the owner and say, "Thanks, boss. This is the best thing anybody's ever done for me." That's not reality. It takes some time and it takes effort. It takes constant communication on the part of the company to help the employees understand. And then what really triggers a big surge in employee understanding and appreciation and that alignment is when the first person gets a check from the plan.
Yeah.
And they realize this is real. Joe retired, and Joe is getting a significant amount of money out of this plan. So we know now that this is not just a theory. This is an actual, very important financial benefit for us because we've seen it work.
So it's going to take time before it starts working. And
yes,
I mean, this is particularly relevant, like you were saying earlier, because we're in that place at the moment where we've got baby boomers who are kind of looking at their succession options. And one of these options is to pursue an ESOP. Something that is interesting that I hadn't thought about before is this idea of getting everybody rowing in the same direction, and that instead of exiting the business the traditional way, actually this makes a lot of sense if the business is performing very well. But it takes time, and I guess we have to be intentional about choosing the right option and thinking about it.
Yes, choosing the right option, and then if an ESOP is chosen, really helping the employees understand it takes time and it takes effort. It's just not going to happen automatically.
Yeah.
So the kind of things that we see people do, we provide our clients a quarterly one-page newsletter. It's an electronic newsletter that we put on their masthead, and they forward that on to their employees. So the employees, and that newsletter will break down one small bite-sized piece of the ESOP and how it works. And so we're educating and keeping the idea of employee ownership ahead of them every month.
Okay.
We also have clients who change their website and talk about employee ownership. They often change their letterhead or the sign on their truck to emphasize the fact that the company's employee owned. They have annual celebrations of the ESOP. We often call those stock reveal meetings, where they talk to the employees about how the value of the stock grew in the prior year, and more importantly, how that benefits them individually. And so if companies will be intentional and take the time to do those things, they will see a significant increase in employee commitment.
And Kelly, that's something your team is working with them through. I get the feeling that if we take a business owner who's owned a business for a number of years, even decades, very often there have been promises or initiatives that have not been followed through properly. And the employees are kind of pretty rightly so kind of suspect of these initiatives. But you're actually working to make sure that the employees understand that this is a serious move and that
yes, and you're absolutely 100% right. At the initial rollout meeting, there is skepticism.
Yeah.
For one thing, it's something that they've never heard of, so we're always skeptical of the unknown. For another thing, it's coming from, the boss. It's coming from the company. And no matter how loyal your employees are, there is always that skepticism between management and employees. I mean, It's just human nature, so we have to deal with that. And then there's skepticism because it seems so complex and difficult to understand. And so we've got to overcome all of those things. And we help our clients do that. We also connect clients with clients because all of our best ideas came from existing clients. We didn't come up with these thoughts. So we will often introduce often the HR director is the ESOP champion at a company. And so we'll introduce our clients to other HR directors so that they can brainstorm and share ideas. And one of the things that you find about the ESOP community is that there is a real sense of camaraderie among the companies that sponsor ESOPs, and they are very open to sharing their best practices.
Yeah, I guess if somebody's, for the person who's listening in at the moment and thinking about, okay, this sounds like something for me, what makes a good candidate for an ESOP? Sort of leadership teams that come into mind, I guess, size of the business. What makes a good candidate for ESOP?
Yeah. Let's talk about size first, because ESOPs are really for mid-size and above companies. They're not for micro companies. ESOPs are complex, and as a result of that complexity, we have lots of lawyers involved, and as a result of that, there is significant expense, and so it might cost, $500,000 to implement an ESOP. And for a company with $300,000 of annual profits, that cost-benefit analysis doesn't work.
Yeah.
And so as a general rule, I tell business owners that you have to have at least $1 million of adjusted EBITDA in order to be a good candidate for an ESOP, and you need to have at least 30 employees. And you need to have, and you mentioned this point, either a strong successor management team in place or a plan to use the ESOP to help build that strong successor management team. If you already have that team in place, the business owner, if he or she wants, can exit sooner rather than later. If you don't have that in place, it's going to delay the owner's ability to completely exit until that team's in place.
Yeah, because I feel like there's a mind sort of set change that the owner's going to have to go through. Effectively, you're not selling to private equity or strategic, but you are putting up, or essentially, I suppose, selling to your employees. They've taken over ownership, so your structure is going to change that.
And we have to remind our clients sometimes, look, you've got a fiduciary obligation to run this business going forward for the exclusive benefit of your employees. So in the past, this has often been a third checkbook for you, and you can't operate like that going forward. You have a stock purchase agreement that's been entered into between the selling shareholder and the ESOP trustee. So I mentioned ESOT earlier, the Employee Stock Ownership Trust. That trust has a trustee, and the selling shareholder negotiated the terms of the sale of his or her stock to the ESOP with that trustee. And all of those terms were documented in a stock purchase agreement. And so those stock purchase agreements lay out the rules of the road for the future and require that the owner do certain things to make sure that the company's operated for the benefit of the employees. And so we help remind the owners sometimes. Generally, we don't have to do this, but sometimes we have to remind the owners that there are rules in place, and it's critical that they comply with those rules laid out in the stock purchase agreement.
So obviously one of the benefits here is a tax benefit, and some owners are coming in thinking, okay, there's a tax benefit to going the ESOP route, but in reality, there's you're now a steward looking after the business on behalf of the employees, and you need to kind of get your head around that.
Right. And so let's talk about the tax benefits since you mentioned them. There are two major ones. The first one is something I mentioned before. In 1984, Section 1042 was added to the code, and in certain situations, it allows a business owner to sell their stock to their employees through the ESOP on a tax-free or tax-deferred basis. So it gives them the ability to avoid the long-term capital gains tax that would otherwise be applied to the sales proceeds. The second big tax benefit is if you have a 100% ESOP-owned company, then that company is going to be an S Corp, and a 100% ESOP-owned S corporation, there is no tax on the company's income. No tax at the company level because it's an S Corp, a flow-through entity, and no tax at the shareholder level because the ESOP trustee is the only shareholder. And under the law, under Section 401 of the code, ESOP trustees are tax-exempt entities.
Okay.
So if I have a company that doesn't pay tax, it flows its taxable income through to its owner, which is tax-exempt. That gives us the ultimate ESOP tax benefit, the ability to operate my business on under the same tax rules as a church or a synagogue.
Okay, interesting.
No tax on my income.
What are some of
that is such a rare opportunity to be able to operate your business in a way that you don't have to consider tax consequences every time you make a decision. You can just focus on the business aspects of the decision and not have to consider what it means from a tax perspective.
Yeah, it does. It changes the dynamic completely, doesn't it? But
yes.
What other considerations are there then that we should be thinking about? We've talked about the cost. We've talked about the tax benefit. I mean, I suppose one thing that comes to mind is our friend, the gentleman that you mentioned who's 80 years old, looking at selling the business, but his words, he wants to keep the name on the company. Presumably, if everybody's rowing in the same direction and the value of the business increases, ultimately there could be an acquisition from a private equity or strategic sort of acquirer, and that name may go away. So there may be a misconception around how you can protect yourself there if you did want to have an evergreen company.
Yes,
you're absolutely. How do we deal with it?
I've been doing this so long now that every year we have a client that comes to us and says, either I want to terminate my ESOP or I want to sell to private equity. And that means the ESOP is going to go away.
Yeah.
And so that is a reality. And if we get to the point where we have a purchaser who's going to make an offer that's well in excess of the ESOP's appraised value, then that probably is the right decision for the benefit of the employees. It gives them the opportunity to realize usually a very significant valuation premium, and it gives them the opportunity to convert company stock into cash, which is much easier to understand.
Yeah.
And they roll that cash over into an individual retirement account or into a 401k plan, and they defer tax on that huge benefit that they got from the ESOP payoff.
What happens on the other side if something goes wrong with the business? If it's convert to an ESOP, I was just listening to somebody saying they want to backtrack. What happens if it goes the other way, if it's not working out?
Well, and it does. I mean, in 2008, we did 4 ESOP transactions in the first half of the year. And then on September 15th of 2008, Lehman Brothers declared bankruptcy and the Great Recession began.
Yeah.
So we had those 4 companies that had no debt before they did the ESOP transaction. And now they're 100% leveraged and their earnings have dropped precipitously. And so that is kind of the ultimate bad scenario for an ESOP transaction. So our experience was that the banks that they had borrowed money from came to them and said, you know, we have covenants in our bank loan agreements and you're in breach of those covenants. We don't want the company, which is the guarantor.
Yeah.
We don't have a personal guarantee from the owners and we don't want the company back. And so we're going to give you covenant relief. And that covenant relief might have been for a 1 or 2 year period. And we're not going to allow you to pay interest on the seller note for this period of time that we're giving you covenant relief. And so in every situation, our business owners agreed. They didn't eliminate the interest that was going to be due on their seller notes. They just deferred it. Mm-hmm. And each of those 4 companies and all of our other clients weathered the storm of the Great Recession. And those 4 clients all rebounded stronger than they were before the recession, because one of our clients that year was a very large wholesale distribution company. They had 800 employees before the Great Recession. They trimmed their employee count to 350 as a result of the Great Recession. They had a brilliant CFO. They did other belt tightening moves that unfortunately they had no choice. They had to do to survive. They didn't want to do it, but they had to. And after the Great Recession, their revenue went back to where it was, but their expenses were drastically less, which allowed them to pay off the bank according to the original loan agreement and allowed them to pay off the seller notes according to the original loan agreement. So each of those, in pretty much a worst case scenario, survived and thrived.
Actually came out the other side stronger by the sounds of things.
Yes, they did.
So there is this element, because you're not beholden to the bank. There's the seller, or potentially a seller agreement in place where we can defer those payments, and you have a little bit more control potentially than other companies going into a tough
Absolutely.
market. Yeah.
Another thing that business owners, especially our more thoughtful business owners, consider is, do I really want bank financing on my ESOP transaction, and the pressure that comes along with bank financing? Because the vast majority of our clients have not had any bank debt for decades before they do this transaction.
So this is an interesting point. What options are there in terms of financing?
Can be all seller financed.
Okay. So you don't need,
which means that the seller doesn't get any cash at close, or maybe a nominal amount. Often transactions are financed with bank debt, seller notes, and excess company cash. So if you did a fully seller financed transaction, the seller might get some excess company cash at close. Otherwise, they're just going to get the promissory note, the seller note, issued by the company to them, and they get paid off over time.
Yeah. I mean, I was also really interested and curious about what makes a successful ESOP. Once you go through the process, and I'm sure you've had many of these, but we're talking about what could go wrong, but equally, what makes an ESOP something successful that does potentially go on for generations?
I'll give you a great example.
Yeah, let's hear it.
We had a company, an engineering firm, a very large, very successful engineering firm. They were already 50% ESOP owned when I started working with them. They decided that they wanted to become 100% ESOP owned. At this time, they had 1,200 employees, 200 of which had a PhD in engineering or physics. So they were an engineering firm doing government defense work, doing work for the Department of Defense. And so they did the ESOP. They had an incredible communication plan. And within a decade, they grew from 1,200 employees to 2,200 employees.
Did the revenue and the profit double in size as well?
And that company was then sold for $1.65 billion with a B dollars.
Wow.
And so you divide, and you didn't divide 1.6 billion because there are expenses associated with the transaction, but that net amount was still well over $1 billion. And you distribute that among 2,200 employees, you change lives.
You do. Yeah, it goes back to what we were talking about earlier with kind of bridging that wealth gap, I guess. You change lives.
Exactly right. My favorite story from this, I was talking to the CEO of the company a year after the transaction. And I just asked him, I said, everything went great. What was the best experience that came from this? He said, Kelly, I had a gentleman who had worked for the company for 40 years in the mailroom. Companies, for the most part, don't have mailrooms now, but he was working in the mailroom. So a low-paid, this guy did not have a PhD in physics or engineering, so a lower-paid employee. He said, I have an open-door policy. He said, this gentleman walked into my office one day and said, boss, I went to the meeting. I listened intently. He said, I just don't understand what this means for me and for my family. And so the CEO got on his computer, found this gentleman's name, and he said, it means in a few months, you're going to get a check for over $4 million. And this gentleman said, I can't even believe that. I can't imagine what that means. But he said, I'm going to use that money. One of the uses for that money is going to be is going to be to make sure I set up a fund so that all of the children of this family forever will have their college education paid for.
Wow.
And so ESOPs can change lives. They can be more than a retirement plan. They can be a wealth creation vehicle. And they can provide significant benefits for people that otherwise, would have lived on a modest 401k amount and on Social Security.
When you mention that life-changing story, it makes me think about sort of you and your role in this as well. Was it 4 decades ago?
Yeah.
Sort of starting out and writing the first white papers around this. But how do you feel? I mean, you're changing lives as well. The work that you do changes people's lives. I'm so fortunate. I couldn't have found a better profession. And as I mentioned, it was just totally luck. If I had gone into trial law and been a litigator, I would have been retired for 10 years, probably would have been in and out of rehab and had multiple marriages. So true.
Because it's such a difficult, stress-filled life with very little job satisfaction.
Yeah.
You win a case and you feel good for a little while. I love work every day, and I have zero intentions of ever retiring because it is so fun. It's intellectually challenging. You get to work with great people who think the way I think. They want to do well for themselves while doing well for others. And so I refer to those people as compassionate capitalists.
Love it. Yeah.
And those are the people that I love to work with. I've got this scale that I call the greed scale. And
Okay.
on one side of the greed scale is Mother Teresa. And on the other end is Gordon Gekko.
Yeah.
You don't have to be Mother Teresa to do an ESOP because you're going to get full value for your company. Yeah. But you can't be Gordon Gekko just focused on yourself and what this means for you. ESOP candidates are people that care about their employees and their community. It's incredible how many times when we do an ESOP transaction, the owner decides to make charitable gifts as part of that transaction. And so those are the kind of people that I love working with, people that are compassionate capitalists and thinking about more than just taking care of themselves. They care about other people.
If you sort of, somebody listening in right now, business owner listening to what we've talked about, what's the advice for owners who are thinking about going down the ESOP route? Now, you just kind of listening to our conversation and get a sense of that they're in the right size, in the right space. I imagine it takes time to set this up. You're potentially a baby boomer looking for those options, the succession options. What's some advice for somebody who's considering this?
Do some research. And here are 3 good ways to start that research. You can go to our website. We've got lots of educational material, including a link to my book. And the book is the only one out there written on the subject of ESOPs for business owners.
That's the ESOP Coach.
The ESOP Coach, yep. And you can get it on Amazon. And all the other ESOP books are written for lawyers and CPAs and investment bankers. And my book has business owner language explanations of what an ESOP is and how it works. It compares ESOPs to other exit strategies. And it has 6 case studies because that's how business owners learn best.
Yeah, I think what you were saying earlier is
study that looks like them and reading that one. And then, you got to have the obligatory technical explanations and all the legal mumbo jumbo. But instead of doing that as a dissertation, I've done that in a Q&A format.
Okay.
You don't have to read the entire boring rules and regulations about ESOPs. You can find the question that you're interested in and just read that one little page and get your questions answered and not feel like you're drinking from a fire hose.
Brilliant.
There are also two industry associations. There is the NCEO, so go to nceo.org, National Center for Employee Ownership.
I'll make sure we put all of this stuff in the notes as well for anybody listening that is there.
And then there is also the ESOP Association of America, and so you can go to their website. So start there. Then the next step is if you think an ESOP might be of interest, then contact us. We're glad to have a no-cost, no-obligation discussion. And then if it looks like it's worth pursuing, the next step would be to do a feasibility study where you will get all of the data that you need to make an informed decision about whether this is the right approach for you. And then you go through the implementation, and then you're an ESOP-owned company.
How long is that implementation time? Is it?
The feasibility study typically takes 6 to 8 weeks. And then once the decision is made to implement, it takes 4 months.
Okay. I think the key thing is that business owners understand that they have options. It's not as simple as as a private equity acquirer closing the doors in some cases, a strategic acquisition. There are options, and just really understanding what those options are and exploring those options and giving yourself time.
And so I see the world as a sale to an outsider, a sale to insiders, and an ESOP is a very tax-advantaged form of a sale to insiders, and then die with your boots on.
Yeah.
I think those are the three options.
I'll go one last question for you, Kelly. The name of the name of the show is The Freedom Experience, and I'm interested in what your thoughts are and what freedom means to you and what that's meant to you through your life.
I think the ability to chart your own course, whether it's by accident, as it was in my case, or whether it's by intention, the ability to have control of your life and the people you spend your time with and the work that you do.
You've obviously found something very early on that you just stuck with. And I mean, I imagine there's been ups and downs along the way, but looking back, I imagine you, as you say, you were in the right place at the right time. You found something that's given you that freedom in your life. And I'm glad.
Yes. Thank you very much.
Well, Kelly, thank you so much for coming on. It's been super interesting, and I hope that the audience has got everything that they need out of it. If you're looking for anything in the show notes, or get in touch with Kelly. But thank you so much for coming on and giving us your time, Kelly.
Sean, thank you very much for having me. I've really enjoyed the conversation.
Brilliant. I hope you enjoyed this episode with Kelly. What stood out for me was how ESOPs aren't just a succession tool. They drive alignment, they protect culture, and they create real wealth for employees. And that story about the mailroom worker getting £4 million, that just really hit hard. I also loved Kelly's point about how ESOPs get everyone rowing in the same direction. When employees become owners, they care about the outcome, and that changes everything. So, if you're at the point where you're thinking about succession planning, or you feel like your team isn't fully aligned, then head over to the website. Links are down below in the show notes. And join one of our free masterclasses. It'll help you get everybody aligned, focused on where you're going over the next few years. And if you're enjoying these conversations, then don't forget to hit the subscribe button on whatever channel you listen to your podcast on, or if you're on YouTube at the moment, hit that subscribe button and give us a rating, because it helps us to get the message and these conversations to more business owners and entrepreneurs like you.